good morning to you guys. Hope you're doing well. Wednesday, the 7th of September 2022. Our risk calculation is worsening over time, so they're actually going quite long. So every one person short, there's 6.5 people buying risk. Now, that's kind of unusual because normally the herd should be kept in a state of fear, so they short, so they kept bearish, but currently they're bullish, and so that's a worrying sign from a big fish perspective, is that you don't want to be doing the same as these guys, because these guys are counter trend and they're normally always like behind the actual move. They're always encountering losses, they're emotional, and there has to be someone to counter their trade as well. So if they're buying, someone has to sell, and that's going to be the broker. So they'll need to get flushed out. I'll talk about what I think is going to happen on the indices as we progress through this bulletin, but this needs to reduce quite badly because I'm not sure how high we've seen this before. I think we're coming close to like a historic high from a Quasidb service. So normally we don't get this, they don't become this long. Normally they're kept in a state of fear. So we'll have to wait and see what happens for tomorrow. I did think this was going to calm down, this 24-hour difference, but it hasn't. It's actually increased quite a bit. And the more it increases, the worse it becomes. So I have to wait and see what happens tomorrow. So don't expect indices to rally because of this, okay? Yield pumped, so that supports a stronger dollar. Don't forget, that's the relationship there. The yield spiking is indicating risk off, and the dollar is a safe haven, and obviously there's a relationship there with the US yields and the USD. The 10-year tracks the dollar yen. So if you want to have a look at a 10-year chart, look how strong that is, and look at your UJ chart. So if you want to get a heads up about potential reversal on UJ, look at the 10-year. And if that looks like topping out, then it could be a reversal time for the dollar yen. But however, the retail guys are incredibly short the dollar yen, and they're holding short as well. They're also short GJ and EJ as well, and AJ, but they're adding short. So it's going to go up to punish them. The yield curve is inverted. We can see the 12-month and the 2-year. So that's unhealthy. If the 6-month goes above the 12-month, then we're basically going to have a huge inversion and like a descent there, not an ascent but a descent on the yield. So flight to safety, basically it's saying, is fear and worry near term, they're more so than the long term, and that's how it is. It's projecting fear and uncertainty. And we've got CPI next week, and that's going to be big. So I think for CPI, we're not going to have a trade of the day. We're just going to watch. I think that's going to be absolutely huge. And VIX is above its 52-week midpoint. So that needs to change. So that's important. So keep an eye on 26.5. Okay, I'll edit this after this video, but keep an eye on that level. That's key because that's the midpoint between the high and the low of the year. So we're above that midpoint. So that's risk off. Okay. Let's see if I'll edit that quickly. Actually, view editing. Let's risk off now. That's important, and above, which is a big deal. So go to view mode, viewing. Yeah, so that's risk off. This is risk off. This is risk off. This is risk off. Okay, and because of that, the dollar is probably going to strengthen. So we've got to be careful with our risky currencies, especially like the Aussie and the Kiwi. And the pound as well. The pound's quite risky. So there's the, we want colours to match. We want big numbers. So UK 100 was a large shift and it matches the big picture. So theoretically, sentimentally, UK 100 could be a good short. You'd want to look at your technicals, obviously. And then pound yen is a buy. And then EJ is a buy as well. So if you're looking for correlation here between risk, you won't be getting it because there's a discrepancy between the sentiment. So if you're looking at DAX and then thinking, why is EJ going up? Well, it's because it's a buy. So you don't look at that correlation. The correlation is breaking down with yen now because it needs to squish the retail guys. Once it does, the correlation can return. Dollar strength. There's always to be said about that. This is very strong. So is it advisable to fight that? Look at the day, week, month, 3 months, 6 months, 1 year. So if we were to buy EU, GU, AU, NU, do note that we've got a lot of technical headwind in front of us. So there has to be a driver to push this. There's issues with each one of these politically, maybe less so Aussie and Kiwi, but we've got oil issues, we've got new PM, we've got potentially a new king as well. That might be a problem potentially. But yeah, it's got political issues, and these are risky currencies if we're going risk off. So they've got their own issues. AU's the laggard, UJ is the winner. It's a complete on a tear, and it's taken stops all over the shop yesterday. It took so much stops, it was ridiculous, and it's probably going to continue higher until it completely eradicates the retail guys. Our trade of the day is a risk off sign, so we want indices to continue to roll over and to fall. If they, for some reason, we rally at London Open, our trade of the day is going to perform poorly. So we need to keep an eye on the fundamentals. It's very, very important. We can look at the bubbles, it's great, but they have to make sense fundamentally. That's really important. So I'll update you guys how this went. And I've got an entry level, so do see Discord as well. So don't only enter below that level, and you've got your stop loss as well. So this is how we are right now. S&P flipped over to sell, and German 30 did. UK 100 flipped back. So there's this. There's the buy because they sold it, but they urgently decided to buy the dip, and by doing so, price fell. So I suspect they're probably looking at sentiment. I think, and they're looking at the sentiment charts because they're saying, "Oh, right, it's a buy," but then they're doing it. So we've got to be a little bit careful if they are catching on to what we're doing. That's going to be quite an issue. So the less people know about this, the better. If all the retail traders around the world knew about sentiment, then it would completely lose its power, and then we'd have to rely on technicals and fundamentals. So it's possible they might have been looking at some sentiment stuff and then decided to buy, but we don't know. We can only hypothesize. But they really did strongly buy the dip here, and we went up, but then we fell, and so we had a momentary payday for those guys. And of course, because they went long, it fell eventually. So very, very choppy. And likewise here we chopped too. Very erratic, very sudden buying volume from the retail guys. When they do, they get crushed, right? US 30, so they went long, so it's a sell. So I would be surprised to see price go above the arrow, because that would be, mean that they're getting paid. Hopefully that's clear. They went long at that point, so we measure some approximate level where they entered. So that would be unusual if they profited, right? So that's the logic. German 30s had a nice reaction off that diagonal. That's not a bad technical play if you spotted it. It was a sell at the high level already, so sentimentally it was good to short. Technically it was a pretty good place to short there, and it really did fall. And they went long, right? So after I've done this video, I'm going to do a little 2-minute, 3-minute video on the indices, because it will tie into London Open, and we'll see how we are, whether or not they continue to buy it. We'll have to wait and see. They're very random, these retail guys. And gold. Now, it was awesome teamwork yesterday. I'm very, very happy in the Quasidb service. We all got together and we shared analysis on gold, and we all profited. So I'm really happy on that. It was a great teamwork. So hopefully you caught some profit yesterday. I had a great day. Be careful here because we got some support, and if they sell it, which they might do, we could potentially have this psychological round number, 1700, and we'll have a bearish volume as well. If they short it, it's going to create volume here where we can propel up against that. So it all depends on the volume of the bears. If they really heavily short it, boom. So we've got to be careful. Stop loss cluster liquidity targets. The largest stop loss cluster is AU, and it's there, 66.83. Note that it's red, red, red. That's aligning. That's aligning. A lot of things are aligning. See what I said about cross yen. right? Even though risk is puking, this is possibly going to continue higher because of the sentiment. All right, so be careful. So don't look at correlation there. The break is breaking down, and the largest mover was gold, which we caught. So that's fantastic. So I'm very happy. That's normal. That's probably okay. 71% failure rate for the retail guys. It was 80% yesterday. I think it was yesterday. 80%. So that would be fairly normal. 70 to 80%. Slightly unusual if we go higher, and definitely very strange if we go below 50, because at a high level they should be losing. So at a static level they should be losing. So below 50 would be really weird. And so our pound USD went up, and it did really well. And then it fell. Then it rallied, and so it had two very good, heroic attempts at trying to defeat the dollar. But of course, we had a risk-off session in New York, and the dollar gained momentum. So the lessons there: trail stops and move stops ahead of entry. Had you done, you would have caught some profit on the pound USD twice. In fact, you could have made quite a bit of profit on that. If you're looking to swing trade, it might not be a good idea, because we know technically and fundamentally the dollar is strong, and we ended up with a 25 pip loss. However, if you did do what I suggested and trail stops, put a trading stop in, or move your stop ahead at entry, you would have done well. So we'll have to wait and see what happens today. Today relies on a risk-off session, so just bear that in mind. If we rally at London, then it's going to cause problems. So we have to look at fundamentals. We're quite extreme, as you can see, and obviously eyes on CAD today and the interest rate decision. So that's the consensus. I'd imagine that probably will be the case. I can't imagine them doing a 4 basis point. They might. If so, the CAD's going to move a lot. So be careful and always keep calm and trade safely. So I'll wrap up now. Do a quick 2-minute video for the private members. Keep an eye on your risk appetite. Keep an eye on your indices. And quick one is just to go to TradingView, and say we want to be seeing red here basically for our trade setup. We don't want to be seeing greens. Okay, so have a great day, and I'll speak to you soon. I'll speak to you very soon for that 2-minute video.